Good morning, guys. This is Simon with Trade and Perform Coaching. This is how you get a hold of me. This is the cost for joining the room for the first month. This is the cost per month after you join the room. And let's go see why that is a value to anybody, right? So the first thing you need if you're going to trade the market successfully is a process that repeats. So within the process, we have critical areas so that we can know where we are in the chart, and that comes from volume profile. If you want to learn about volume profile, the book I recommend you go to is Mind Over Market. So this is how it worked. This was yesterday's, this area, just to give yourself some idea of where we are at on the chart. This is yesterday's price action, okay, in the afternoon. This is yesterday's close, roughly. That's where we closed, and this is where we opened. This is yesterday's high, right up here. This is a prior day's high, and this is the zone I created between a prior day's high and where I thought the market would reject, meaning this yellow-orange. This is a zone, right? This is a zone as well. This is prior day's value area, and then this is yesterday's low. Okay, so now we know where we are on the chart, so you're just not trying to guess. And then this is prior day's fair value, right? So if you look, this ended up being the swing low, and we traded straight through this zone. So remember, when you trade straight through zone one way, you are likely to trade straight through zone the other way. So now we have the pieces together with value area high, value area low, right? You have the entire fair value. So what the market did is at the close, we dipped under Monday's fair value. We traded all the way through fair value. So let's stop there for a second and see if we had any trades in that area if you were trading Asia. Okay, so this is a 15-tick chart, and we use it when the market's a little bit, not just range, but the pace of trade. How did that pace of trade unfold, right? So if we look, what we're looking for very specifically is arrow down and then that it got stuffed, right? Or arrow up and then it got stuffed. We only had one trade in that area, and that was about 19:25 and 7:25 in the evening, Central Time, my time. That was your entry right there. So if you're looking and you're sitting there, hey, I'm trading Asian, I'm trading patiently, and I'm waiting for my trade setup, almost nobody would have traded this out of the gate. Doesn't count. So if you had traded this, what was the trade worth? So this trade entry would have been right here at 18,646. Again, the idea is to repeat the same entry over and over again. 18,646, right? That had a maximum favorable excursion of 18,687, which is roughly 37, let's just call it 40 points, or $800 a contract. The way I trade it, your stop would have been right down here plus a point, so let's call it 46 to 36.50 in this point, which is 10 points. In this case, I would normally say exit after you get 2 bars up. That's your first scale, so that's 46 to 53.50. Let's call it 7 points. So if you had 10 points, you took off 7. That means if you net it out, you have 3 points left of risk, right? So 3 points, and then the most you could have gotten out of the rest of that trade would have been an additional 40 points. So let's say you had 2 contracts on. You took off the first one, 7 points. That's $140 in profit, and it left you with $200 in potential loss on your second contract, 10 points, right? So that would have netted you out at a $60 loss if it stopped, and that second contract went all the way up to 18,688, giving you a potential, right? A potential for 40 points or $800 a contract. So 800 plus 140 is 940. That's how that trade worked. So let's say we were going through and looking for the rest of the trades throughout the evening. Okay, so even though we're not discussing this particular setup, everyone in my room knows you get the plus sign, it gets stuffed. That's a valid entry. Your entry would have been here. So I got to tell you, on the plus sign, guys, you have to have a close back above the plus sign to invalidate it. So it makes it so there's 2 ways to handle the stop. The stop is either from here to here, But what I would have done, so that's 80 to 87, I would have put it at 10 points, maximum 12. But I really would have looked where this bar would close. The algo will tell you where that is, and that's where I would have put my stop. This trade rolled from 18,680, and the best it would have given you was 18,665. 80 to 65 lets you get your, let's call it 7 points of risk off. And obviously we were in trend up at that point, and you would not have stayed short. If you saw this arrow up, I would have suggested you take your money and go. So let's say you didn't get any kind of extension. If you were pushing, you cover the arrow up, it's 18,675 from 18,680, so you got 7 points and another 5 points, let's call it, right? So on 2 contracts you got a total, one for 140, one for 100, $240 on that trade. Then the market goes up, no stuffed arrows. The only reason you would take this arrow all the way up here is if you thought we were going to get continuation. It's 1 bar down. There's no way in hell I would have taken that trade. The trap back in possibility. So now we're going and we're looking for our next trade. Remember, we're looking for a plus sign stuffed or an arrow stuffed. Now look at the value. Just don't skip it. Don't just go, oh, where's the trade? So there was no short that we would take in here. But also notice this runs from 18,699 all the way up to 18,814. That's $2,000 a contract where you don't get a single. Oh, I'm gonna lie, because I probably would have attempted that. So that's 200 points where I would have taken a 10-point stop on that trade. So let's call it minus $200 right there. That's not the arrow stuffed. It's not the one I suggest you look for. It's the arrow up, but that's on my menu, so I'm gonna list it out, right? So again, overnight, I'm looking for the arrow stuff to be very specific. I don't want to change, but I would have taken that trade right there. Is very likely it was outside the channel versus inside the channel, and I would have attempted it. Okay, and remember, this is a 15 tick. I'm going to go show the 24 in just a second. You want the arrow stuffed overnight. Let me be very clear. That was an exception to the rule because it was just so straight up. I would have given that a shot. My next trade is going to come right here. So notice we roll down. I don't get a long setup. You're looking for the arrow stuffed. Arrow stuffed. That one was worth about 100 points. I won't even go through it, but that's, you got your 2, and then the other one went for over 100. Pretty straightforward. And then your next setup is going to come right here. I wouldn't have taken it. It's just not high enough up in the channel for me to take this trade. It worked. That's okay. Same with this. It worked. I wouldn't have taken it. I would have taken this right here. I'd have been stopped. I would have taken this. This is a net break even because of the stop. Okay, now I'm coming over here. This is where we are in the morning. I would have taken this, and I probably would have taken this and this. So this is paid. I would have added to the trade, maybe stopped on my balance and that, but I would have taken this right here, added, and now you can see you got your run from roughly 57 to 03, another $1,000 to the upside. So multiple wins, small risk, high reward, and that's what we're trying to emphasize over and over again. So lastly, we get I'm going to go to the 24 tick just so everyone can match up. Again, what I'm training my brain for here is what do I want to look for in the morning. So again, you'll see overnight on the 24 tick, which I'm going to tell you is harder to trade because usually we have lower range. I normally would not trade the 24 tick. That being said, this was a bit of a hard area. This is the reason why I would not trade the 24 tick overnight, because you end up with stop, 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 stop. You have to be on the 15 tick overnight or it's going to stop you out. Now when the market opens and the speed is faster, you want to switch back to the 24 tick. Why? Because you're going to end up with this. With this is where the plus signs come in very handy when you have range and speed. This arrow stuffed over here, plus sign stuffed over here. That's what you're hunting for. So you have to be able to pivot between the two charts. And lastly, I want to go look at ES really quick. This is ES overnight. 3:59 a.m. 1, 2. See anywhere else? And then right before London Open, 3. Those are all monster trades. There's no need to go through them. You can see them obviously. So this is how you ask for a 5-day pass to the room. There's no pressure to join. This is for people who want to make money. There's no hype. You're following the one signal. You're looking for the arrow signal. You're looking for the arrow to get stuffed. Very, very simple approach to trading, and then you can complicate it from there. Levels matter, support areas matter, all that stuff. But at the end of the day, you're looking for one signal with one controlled risk-reward area. The other signal, and then plus you can add the plus sign. But even without the plus sign, arrow stuffed, get paid, move on with your day. Anyways, hope you have a great day, and we will talk to you later. Thank you for joining.